Welcome to yet another insightful episode of Midweek with Indiacharts. Today we will discuss the dynamics of the market amidst recent shifts and exploring what lies ahead. Hello everyone, I have Jay Vora with me as always, and this is Shilpa Raidas. How are you doing, Jay?
I'm fine. How are you?
I'm doing very good, Jay, and I'm very excited to hear your insights. So, Jay, we have seen some correction in the US indices. Can this be an indication of a deeper correction in the coming days and weeks? Also, please tell us your view on the dollar index, gold, and silver, Jay.
Right. So, first thing first, I think last week we had this non-farm payroll data and which has come above the expectation. Now, I was trying to hear out people and make sense out of that. So over there, again, the camp is divided. Basically, the ones who are bearish. So they are saying that the part-time jobs are much higher, and the full-time jobs are actually going down, which is actually a bad sign, right? But I mean, market focuses on the headline number, and that was stating that there was a good job growth that was seen. Now, see, what what is gonna happen is that uh, I mean, right now we are seeing commodity prices coming higher. Okay. Now this will lead to some sort of inflation coming back. So far there was this consensus that inflation is falling, so the Fed will cut rates and so on. However, I mean, if we see in the past, I mean, 2 to 3 months or so, I mean, commodity prices have gone up, gradually higher, like crude, which was at around $70, 70, $75 or so. I mean, that has shot up to 90 or so. So these all things will, come into play. Now, I think from the Fed's language also, we have, one takeaway is that until they are not sure that the inflation is going to come down, they don't mind holding the rates at higher levels. Okay? And and I mean, market has defied all the views, because earlier the consensus was that if we go towards the higher rates, then market would collapse and all. But I mean, market is surviving, right? I mean, and it
Right.
is not just surviving but thriving as well, and it is inching higher as well. So I think, see, higher rates will eventually lead to problems, okay, in the economy. That is from the fundamental perspective, right? But at the same time, what we need to do is that we have to respect the price action, okay? And so far, when we look at the chart structure, it isn't, really saying any. I mean, we aren't seeing any signs of weakness so far, okay? So wait, quickly share my, let me share my screen. So if you see the S&P 500 index, I mean, there has been some consolidation or zigzagging over here, but it is well above the 40-day exponential average. I think when I was looking at the US indices, only Dow Jones Industrial is the one where there seems to be, like, 40R is breaking. So far it has held it. I mean, this was only one day where it had broken below the 40R. But in this process, what it has done is that it has completed the cycle. And I think even in S&P 500, the cycle would be complete. No. So it is, I mean, it has not complete. But even if we see, I think NASDAQ 100 over there, again, we have seen a cycle completion over here, and there has been this pullback towards the 40-day average. Now, for any correction to happen, I mean, significant correction to happen in the US indices, these all key indices need to break and sustain below the 40R exponential average. I mean, 40-day exponential average. Until that doesn't happen, the broader trend, we can say, is up only right now. Okay. It is only when the 40-day breaks on the downside, that's where we can expect a correction. And to be honest, I think the sideways consolidation that we saw in the Nifty index, and during this time, the correction that we have seen internally, I think more or less S&P is coming to that phase. Okay. So, I mean, we will cover this part just in a while. But there could be a chance that US indices does face some correction in the days to come. And eventually, I think the 40-hour may also, the 40-day may also break. And if that happens, there can be correction, but that not necessarily will translate into a bigger correction for Indian markets. And we will come to the setup as to why I am saying that. But yes, this is what the broader setup is in the US indices. Now, two things that have worked very well in the past 1 week or past 1 month, you can say, is gold and silver. They have seen a massive rally over here. Be it gold, silver, which was lagging, finally that has seen a catch up, and we are seeing a good up move in silver. Dollar index has been a laggard. I'm not sure what it is up to. Because over here, ideally, I would have thought that if the high breaks, then we might end up seeing the equality level. But it has again paused, and it is at the key daily averages. Okay, now do we see a pickup from here, and it again rises higher? Or there are so many things that are possible for the dollar index, and all will be factually correct. Like, this can end up becoming ABC correction and then we go up, or it makes, a sort of a triangular structure and then it declines. It is in no man's land right now, and we are not able to conclude so far, whether the trend is up or down. But I think when we look at gold and silver, I think the runaway rally that we have seen in gold. So this can be 1, 2, 3, 4, and within 5 we are seeing 1, 2, 3, 4, 5. If this is the case, that means that a rally from year to year could be complete, and at some point, we can expect a correction. In fact, when we look at the silver, when we look at silver as well, we can see a similar thing, that this is 1, 2, this is 3, this is 4. And this is wave 5 that is going on. Now, within wave 5, we have seen one negative daily close. But when I look at the hourly chart, this looks more like a correction in wave 4, which means that this is wave 5, right? So within that, this is 1, 2, 3, 4, and this is wave 5 that is unfolding. So the broader point is that the daily negative close in silver is actually deceiving us. Okay, broadly this looks like 1, 2, 3, 4, 5. Okay, so if that has to happen, then at some point of time, this 5-wave rise will get complete and we will get a pullback. And also, one of the reasons to think that the 5-wave rise is complete is because when we look at the daily sentiment index, this for gold and silver is consistently around 90 levels or so. I think for a day or two, even in silver, the DSI reading had gone all the way to 91%, which means that 91% of the people were actually bullish on silver. And that's where it had seen some minor dip, and once again it has started to rally. But I think when we combine the Elliott wave and the sentiment, it seems like that we might have seen this 5-wave rise in gold and silver. Now, the confirmation point would be basically, when the 40-hour breaks and it sustains below that. So we go towards a normal process, which is of, looking whether the averages are breaking or no. If it breaks on the downside and it continues to sustain, then that's where, I think a case of a correction will kick in. But yeah, that's how it is. So I think gold and silver, it seems like that the 5-wave rise could be complete and we might get a pullback at some point. And in dollar index, we need to see what it does near the daily averages, which is around this point. I think today we are going to see a CPI data as well. I think if that comes a little hotter than expected, then there can be, we might end up seeing some correction in gold and silver. And in fact, that may lead to an up move in the dollar index. So I think today's data might be, we need to watch it closely. But see, the broader thing, that one needs to understand is that probably the Fed is done with the rate hiking thing for now. Okay. Now, until we see a surge of inflation once again, okay, only then I think they will go and they will hike the rate. But right now, the expectation of rate cutting which is there, I think if CPI disappoints this time, because what we are having is CPI data month on month, that has inched up a bit. I think it was based on the last reading what I'm saying. Then we have got the job data, which is also looking decent, and which is in fact hotter than expected. So that is telling you that the job market is hot, and the economy is doing very well. Now, logically, when the economy is doing very well, why would Fed want to cut the rate? If it does that, it will further fuel the rally in commodities and all the asset classes, and that may eventually end up leading to inflation, right? So, I mean, if we go by what Fed had said in the past as well, is that they are more comfortable keeping the rate higher for longer till the time they don't see inflation coming down, towards their comfort zone and sustainably going down towards that 2% mark. So that's where we stand. I think ahead of the CPI data, the setup looks interesting, where dollar index is at the support level. Gold and silver, it looks like a 5-wave rise could be completing. But yes, we need more confirmation. And one thing is for sure, I think here we have a lot more certainty that once this rise completes and we get a pullback, that may, I think, end up being a very good buying opportunity now. That is because we have seen a impulse move on the upside. Impulse move happen in the direction of the trend. Okay. So now, the patience game will be to wait for the correction to unfold and maybe come back towards its crucial daily averages. And that's where, once again, if it gives us signs of picking up, that would be the point to, probably enter gold and silver once again for the next leg of up.
Okay. Jay, many of the key Nifty indices have made a new all-time high today. Can we see this rally continuing, or do we need to brace ourselves for a correction? And also, what are the sentiment indicators on strike telling you right now, Jay?
So yeah, I mean, depending on bracing yourself for the correction would be based on the time frame. Okay. Because see, what is happening right now is that from this low to this high, we already now have 9 legs. Okay. So 1, 2, 3, 4, 5, 6, 7, 8, and 9. Now 9 legs means it is 5 plus 4, which is an extension in impulse. Right? Now, if this rise is an impulse, okay, and we get a corrective pullback, so then ideally we should again see, Nifty index rising higher. And in fact, if we see for many other indices, you take it 500, in fact, everything is green over here from the low, which means there was hardly any day of correction in Nifty 500. Apart from this. Now, one common thing which I'm seeing in many of the indices are that they are reaching, some sort of resistance level in the short term. Like, if you see the line which I've drawn over here, I mean, connecting the highs. So the Nifty 500 is reaching that point. In fact, if you see the Nifty 50 index, even that is reaching towards that point, right? I mean, if I connect the trend line from this high to this high, and now we see that the Nifty index is coming towards that point. So I think, over here, maybe there can be a risk of a correction that can set in, but that correction could be that 300, 500 point, which is more like an up move and a pullback. Okay. So that is what we are thinking about it right now. I mean, nothing beyond that to say that, we are forming a major top at this point of time. I mean, the ones who are bearish, and I think, this is something that is constantly there in our mind as well, that can this be an ending diagonal pattern and we end up seeing a big correction or no? So as of now, because, this impulse rise is available over here, that we can see in the Nifty index and many other index, So we would want to see how the pullback happens. I mean, if it ends up being, say, corrective and overlapping, then ideally, you would expect next leg of the up move to eventually unfold. Now, I think given that we have elections going on now, I mean, which will start, the votings will start, and result I think we are going to get in first week of June. So what frankly I'm anticipating is that for the next 1 or 2 months or so, at least the market mood would be positive, mainly due to election. So, my broader expectation would be that at some point of time, this rise completes, then there will be a pullback, and there will be again an up move that should follow. And this would mean, I mean, across all the indices, I would expect so. But there are few indices which are doing some different stuff. I'll come back to that in a while. But even say in mid cap index, small cap index, and so on, I would expect that this current rise at some point it will end, and we'll get a minor pullback. Okay, and then that pullback will help us understand whether we are going to see further more up move or no. I mean, if the pullback doesn't end up being an impulse decline, then yes, definitely the thought would be that there will be this ABC pullback, and then again it will inch higher. But yes, if the decline from here that we get is very sharp, then we have to be a little careful. But I mean, that is, like I told, that is not what the broader thesis with which I am thinking about it right now. So before running to any conclusion, only one thing I can say is that this move could be getting complete at some point of time. So the way to do, I mean, this is something that we have been highlighting to the subscribers as well, that just trail the reversal level with the 40-hour exponential average and see where it takes you. I mean, as long as that doesn't break on the downside, there is a chance that there will be minor pullbacks that you may see, but eventually it will rise higher. I mean, even if you see for the Nifty index, so over here as well, it had come back towards the 40-hour exponential average. It again started rising higher. In yesterday's correction, we saw a pullback towards the 20-day average. I mean, 20-hour average, and now again it is rising higher. So as long as the 40-hour doesn't break, okay, and this is true for all the indices which are trending, okay. So 40-hour average will sort of work as a trailing reversal level. So as long as that doesn't break, stay put. If that breaks, then wait for the correction to play out, okay. And in that correction, you figure out whether the fall is impulse or it is corrective. If it is corrective, then like I told, I mean, there can be that next leg of up move that can unfold. And now that I said that many of the different indices are doing different things. So in Bank Nifty, broadly we are still thinking that this entire rise could still be an ending pattern, okay. But over here, we can see furthermore 800 or 1,000 points on the upside. And at the same time, when we look at the Nifty IT index, I mean, this already looks like that it has topped out, okay. But now, yesterday or day before yesterday, we had put out a post saying that is it the case that a three-wave pullback is complete over here, and can we see a bounce, and only then it declines? Because right now the base case is not that the high will break. So now we are coming into the result season, and IT stocks are the ones who are going to I mean, give out the results in a while, in few days or so. So that's where we'll get to know the trend, because honestly this is very difficult to count as an impulse. So to count it as 1 2 1 2 or 1 2 3 4 5 would be difficult. So the preferred count is actually to take this rise as an corrective pullback, okay, which means that this is A, B, and C, and the prior decline that we have seen in IT basically over here, that was W, this is X, and we may end up forming a bigger Y eventually on the downside. But that's where we'll have to take it step by step, where the trend line needs to break. If that breaks, then that's where a bigger level on the downside will open up. So the broader point being that different indices are doing different things, I mean, that is happening globally as well. Like, there was a point where dollar was going up, bond was going up. So, each thing we have to keep, I mean, we have to look at it separately till the time, you get more clarity on the macros. If everything then again starts getting in sync. Right now, they are surely not in sync, right? So we need to see each chart individually, be it for index or be it for stock, and accordingly trade it. So as of now, I mean, I'll just revisit that once again, that many of the key indices are hitting short-term resistance line over here. Okay, I mean, you look at it at the daily chart or the weekly chart. So at the max, what I'm expecting in the near term will be pullback at some point, but that's about it. I mean, eventually, I would expect higher levels to come. So let's see how things unfold. Now, also one of the reasons why I am thinking about furthermore higher levels in the Nifty index is because when we look at the FII's positioning, okay, after a very long time they have come to net buy, which means that the FIIs are actually net long in index futures. Okay, so far they were stuck in this range. I mean, I think this was minus 20,000, this was minus 1 lakh or so, and it was just zigzagging, and that's why you see that we barely had any trending move in the Nifty index. But I think as their positioning also starts going towards more bullish side, that's where I think this positioning of FIIs, it might go to plus 60,000 contract or 90,000 contract. So that will be the point at which I'll be a little worried and see if the market is getting overheated or not. So the question which many may have is that, what will change the view? What will be the point when we turn from bullish to bearish? So it would be like if many of the indicators, they reach their overbought zone, which we are looking at and which we will discuss in a while. If that happens, then we'll be a little concerned. Or if the Nifty index doesn't break this trend line and it ends up breaking, actually the support level on the downside, which is the 40-day exponential average, then I'll be a bit worried. But until then, I would think that any pullback that may come, that may be, sort of just a pullback or a minor degree correction, and eventually the momentum should broadly be bullish. Because right now what is happening is that, say, Nifty is bearish, Bank Nifty is bullish, PSU index is bullish, and so on. I mean, a lot of rotation is happening, right? So that's why, I mean, Nifty may not really reflect the true picture, but I think the underlying momentum should be okay as long as the 40-day average is held on the downside. Okay. And it is only when these sentiment indicators, they reach the overbought zone, that's where we'll be a little concerned. Because even if you see the market breadth, this also was something that we had pointed out, that this had hit an oversold zone and it is now recovering. So say this breadth, if it comes over a year or so, that's where we will be a little concerned and we'll be looking at it, whether are we topping out or no. But until that doesn't happen, I think the momentum is in the favor of the bulls. And any minor hiccups that we see, that should be seen as just a dip as long as the averages are held. So yes, so broadly, that's how I'm thinking about it. And in fact, even if you see diffusion indicators, so I think percentage of stock above the 20-day average. So this, if you see for the small and the mid caps, it had gone to around 92 or so. Okay. Now, usually what happens is that while the index tops out, we might end up seeing the divergence that may eventually play out. Okay. So it can very well happen that it becomes something like this. We see divergence, and your small cap also sees minor pullback from time to time, and then it inches higher. Okay. And we end up seeing divergence over here, and only then it declines. So, all these things can happen, but it was important that when it came to oversold zone, and there was confluence of many other indicators coming to the oversold zone, where we thought that if not an up move, at least a bounce will play out, right? And once the 61.8% retracement broke of this entire decline, okay, the 61.8% broke on the upside. So that's where we, made this call that probably, higher levels are likely to come in the short term. And maybe, even the election which is there, that may keep some positive momentum in the near term. So yes, broadly, I think the things to watch out for is basically whether the averages are holding or no on the daily chart. Okay. And if any of the sentiment indicators are reaching to extreme overbought zones, especially the FI's positioning or the breadth ratios. I mean, if they reach an extreme, so that's where we will think about it, that if are we approaching any major top or no.
Okay. That was very insightful, clearly insightful, Jay. Thank you so much. I would like to inform our viewers about our upcoming webinar. In fact, we are having a live webinar this Saturday, where we are going to talk about how to use sentiment and diffusion indicators in Strike. Jay himself is beholding the webinar. So like I mentioned, it's on Saturday, it's at 10 a.m. Basically, what we will talk about is understanding the different sentiment and diffusion indicators. Jay will also explain the variations that can happen in different types of markets and show you how to use a combination of sentiment and diffusion indicators to time the market. So it's going to be very fruitful for you guys. I insist that you guys go on to the link I'm going to leave down on the description. It's a free registration link, so register yourself right away. And as we wrap up our episode today, remember the path to financial prosperity is paved with insights and informed decisions. So you should definitely download Strike. I will leave a link down of Strike in the description. Sign up for its 7-day free trial and also follow Strike on YouTube and Twitter. The link is right there. Thank you very much, Jay, for this lovely episode. I will see you guys next week. Thank you so much.
Thank you. Thank you.